If you invested $10,000 in Bitcoin at 25% annual growth over 20 years, you'd have $867,000. But here's the problem. 99% of Bitcoin holders will panic sell long before they get there because they fundamentally misunderstand the one mathematical concept that makes Bitcoin work. And I'm not talking about blockchain technology or private keys or any of that technical stuff. I'm talking about something so simple a fifth grader learns it in math class. Yet somehow our brains are literally wired to get it catastrophically wrong. Quick disclaimer. This is purely educational content, not financial advice. Don't invest money you can't afford to lose, and always do your own research before making any financial decisions. Picture this. You're trapped in a stadium, and water is slowly filling up. At what point do you start panicking? Most people would say when it's halfway full, right? Wrong. By the time you realize you're in danger, you'll have exactly 60 seconds before you're completely underwater. And that's the exact mistake Bitcoin holders make every single day. Here's a riddle that'll blow your mind. Imagine you're sitting in a stadium with a magic water dropper. At noon, it drops 1 drop. At 12:01, 2 drops. At 12:02, 4 drops, doubling every minute. How long until you're underwater? Take a guess right now. Months? Days? Hours? The answer is 50 minutes. By 12:50, you're holding your breath. But here's where it gets absolutely wild. At 12:44, after sitting there for 44 minutes, you'd see basically nothing. Maybe a few puddles if you squint. Then at 12:45, you might notice some water accumulating. 5 minutes later, you're completely submerged. This is called exponential growth, and it's the single biggest concept that separates Bitcoin believers from Bitcoin paper hands. But before you think this is just some nerdy math lesson, wait until you see how this exact pattern is playing out with Bitcoin's scarcity right now. Bitcoin has something called the halving that happens every 4 years. Think of it like this. Imagine if Pokemon made a limited edition Charizard card. Only 21 million will ever exist, period. At first, stores get 50 new cards every 10 minutes. Then suddenly they only get 25. 4 years later, 12.5. Then 6.25. This keeps halving until eventually new cards stop appearing altogether. This creates what finance nerds call a stock-to-flow ratio, basically comparing what exists versus what's being produced. Gold's stock-to-flow ratio is about 62 years. Silver is 22. Bitcoin? Already sitting at 120. But here's the mind-bending part. In 2028, it jumps to 240, then 480 in 2032. It doubles every 4 years automatically, following that same exponential stadium pattern. And if you think that's wild, wait until you hear about the efficiency revolution that's happening behind the scenes. Ever heard people panic about Bitcoin using more energy than entire countries? They're making the same mistake as someone watching 2 drops of water at 12:02 and calculating that it'll take years to fill the stadium. There's this principle called Moore's Law from the 1960s that showed computers double in power roughly every 18 months. Your smartphone has more computing power than all of NASA during the moon landing. Let that sink in. Bitcoin mining computers follow the same pattern. They keep getting exponentially more powerful and efficient. Your new phone has better battery life than your old brick phone, even though it can stream Netflix, run GPS, and basically replace your entire life. This is why energy experts believe Bitcoin's electricity consumption will eventually peak and possibly decline. Another exponential curve that our linear thinking brains completely miss. Hype the video. If you're starting to realize your brain has been lying to you about exponential growth this whole time, you're not alone. And honestly, this might be the most important financial concept you'll learn all year. But the most mind-blowing exponential number? It's the one that makes Bitcoin literally impossible to hack. Bitcoin security uses something called SHA-256 encryption. That 256 means there are 2 to the power of 256 possible combinations to crack it. Okay, cool numbers, bro. Yeah, but here's what that actually means. There are approximately 10 to the power of 80 atoms in the entire observable universe. 2 to the power of 256 is roughly 10 to the power of 77. So there are almost as many possible Bitcoin encryption combinations as there are atoms in the universe. Think about how many atoms are in your fingernail alone. The numbers become so large they're basically meaningless to our tiny human brains. Here's a better way to visualize it. Imagine trying to find one specific grain of sand on every beach on planet Earth. Now multiply that difficulty by 1,000,000,000. That's still way too easy compared to breaking Bitcoin's security. Oh, and by the way, this same encryption protects nuclear weapons, military communications, and your online banking. If SHA-256 gets broken, Bitcoin losing value will be the absolute least of your problems. So if Bitcoin security is basically unbreakable and scarcity is exploding exponentially, why does everyone keep asking if they're too late? When you see Bitcoin went from fractions of a penny to over $100,000, your brain screams, "I missed it." People thought the exact same thing at $100, and at $1,000, and at $10,000, and at $30,000. They're all looking at past growth and thinking linearly instead of exponentially. Remember the stadium? Most people think we're at 1249 with water up to our knees when we might actually still be at 1244 with just a few puddles on the field. Let's run some numbers that'll make your calculator sweat. Bitcoin grew at roughly 100% per year on average over a decade. Obviously, that exact rate won't continue forever. That would be completely unrealistic. So let's get super conservative. What if Bitcoin only grows 25% annually for the next 20 years? That's slashing the historical growth rate by 75%. $10,000 today becomes $867,000 in 20 years. Compare that to the stock market's historical 10% average return. That same $10,000 becomes $67,300. That's an $800,000 difference. And we're being pessimistic about Bitcoin's growth rate. But here's where most people completely blow their Bitcoin strategy. Understanding exponential growth intellectually and actually holding through exponential volatility are two completely different beasts. When Bitcoin drops 30% in a week, which it does regularly, your linear thinking brain says it's going to zero. When it's up 300% in 6 months, your brain says this is the top, sell everything. Both instincts are wrong because they're based on linear thinking. The water drops looked like nothing changed for 44 minutes. Then suddenly everything changed in 6 minutes. Bitcoin follows the same pattern across 4-year cycles. Most people buy high when everyone's excited and exponential growth feels obvious, then sell low when exponential growth looks like it's over, right before the next surge begins. And this brings us to the 3 exponential patterns critics completely miss. When critics say Bitcoin uses too much energy, or it has no real use case, or it can't be valuable, they're missing all 3 exponential patterns we just covered. They can't see the scarcity explosion coming because they're thinking linearly about supply. They don't understand the efficiency revolution because they're projecting current energy use into the future without accounting for technological improvement. And they definitely can't grasp the security universe because our brains literally can't process numbers that large. They're like someone in 1995 confidently declaring email will never replace fax machines because faxes are instant and email requires computers. Technically true at the moment, completely wrong about the exponential trajectory. So here's the million-dollar question everyone's really asking. If we're really at 1244 in the stadium and not 1249, what does early actually look like? Here are the signs. Most people still don't own any Bitcoin. Most financial advisors still recommend zero or minimal crypto allocation. Most countries are still figuring out regulation. Most banks are just starting to offer crypto services. When Bitcoin is late, your grandma will have some. Your local bank will offer Bitcoin savings accounts. Financial advisors will recommend 10 to 20% allocations as standard. Companies will hold it as treasury reserves routinely. We're not there yet, not even close. The puddles are forming, but the stadium's nowhere near full. But knowing this intellectually won't help you if you don't understand the one thing that separates winners from losers. The difference between Bitcoin winners and losers isn't intelligence, timing, or luck. It's time horizon. If you're trying to predict whether Bitcoin will be up or down next month, you're playing a game designed for you to lose. But if you understand exponential scarcity patterns, efficiency improvements, and security fundamentals, the 10-year picture looks radically different than the 10-day picture. Remember, exponential growth looks like nothing is happening for extended periods, then suddenly everything happens at once. If you're measuring progress in weeks or months, you'll panic sell right before the exponential curve goes vertical. Which brings us to the final thing. 99% of Bitcoin holders get catastrophically wrong. Here's what most people miss. This isn't really about Bitcoin at all. It's about training your brain to recognize exponential patterns in a world designed for linear thinking. Once you truly understand exponential growth, you'll start seeing it everywhere. Compound interest, skill development, network effects, business growth, technology adoption. Our education system teaches us to think linearly. Get good grades, get a job, work 40 years, retire. But the actual world runs on exponential mathematics. Bitcoin is just the most obvious example because the exponential patterns are literally coded into the protocol. You can't miss them if you're looking, but most people aren't looking. They're too busy checking price charts and asking, when moon? Look, I get it. Everything I just explained goes against every instinct your brain has developed over millions of years of evolution. Linear thinking kept our ancestors alive, but linear thinking in an exponential world leaves you perpetually confused about why everyone else is getting ahead. The stadium fills with water whether you understand exponential growth or not. Bitcoin scarcity increases whether you grasp the math or not. The only question is whether you'll be one of the 99% who panic sells when nothing seems to be happening, or the 1% who understands that the most dramatic changes happen right after it looks like nothing's changing. If this completely rewired how you think about Bitcoin, or honestly about anything that grows exponentially, smash that like button and subscribe because I break down complex financial concepts that everyone else makes unnecessarily complicated. And here's your homework. Explain the stadium riddle to someone this week. Watch their face when they realize how wrong their guess was. That's the exact moment their linear thinking brain confronts exponential reality. And once you see it, you can't unsee it. Drop a comment with your original guess for how long until the stadium fills. Were you off by hours? Days? No judgment. 99% of people get it wrong, which is exactly why 99% of people will never truly understand Bitcoin's potential until it's painfully obvious to everyone. The water's rising. The question is, are you going to be the person who sees it at 12:44 or the person who realizes it at 12:49? Your financial future might literally depend on understanding the difference.